So there's a new tool out from MetaTrader 5, and it's making some pretty big claims, like being able to trade gold with incredible precision, even when the market is going completely haywire. Today, we're going to dig into the V.89 update to equity mathematics and see what all the buzz is about.
You know the feeling, right? Trading gold can be like trying to captain a tiny boat in a hurricane. One minute, everything's calm, and the next, some big news drops and a massive price swing just threatens to sink your entire account. It's an incredibly high-stress, high-risk environment that traders have to deal with every single day. Well, that's exactly the problem this V889 update is designed to solve. The source material paints it as a high-performance expert advisor, an automated trading tool that's been built from the ground up to really master the chaos of the gold market. And let me tell you, according to the announcement, this isn't just some minor tweak. It's promising some serious processing improvements and an advanced AI just for closing out orders. The goal for all of this? To make automated trading way smarter, way faster, and a whole lot more precise. Okay, so let's get into the guts of this thing. The first major upgrade is a fundamental shift in how the tool even analyzes the market. And this isn't just a small improvement, it's a completely different philosophy, and it has some massive implications for traders. So here's the key difference. The old method was kind of like getting a snapshot of the market every minute or so, whenever a new price candle formed. But this new version, it monitors every single price movement, what they call a tick. It's literally the difference between looking at a photograph and watching a live high-definition video. Decisions aren't just faster, they are instant. And the idea behind this change is actually pretty simple, but it's powerful. By focusing on the raw behavior of the price, not just its dollar value, the analysis supposedly gets a lot cleaner. The claim is that it can dodge bad trades by reacting to what the market is doing this very second, not just where it's been. But what does all this real-time reaction stuff actually mean for your bottom line? Well, the biggest promised impact is on risk, specifically on something called drawdown, that awful feeling when your account's value drops from its peak. And get this, the source material slaps a massive number on this claim. It says that in their initial tests, this new tick-by-tick analysis method cut drawdown by a staggering 75%. I mean, wow, that is a huge claim for any trading tool. And to help you wrap your head around that number, the source gives this really simple example. A situation that might have cost you a $100 drawdown before would, with this new update, only result in a $25 drawdown. That's a massive, massive difference when it comes to protecting your capital. All right, so that's the first big change. The second major upgrade tackles another huge pain point for traders, managing your available capital or your margin. And to do that, the tool introduces a new feature they're calling lot sequencing. So what is lot sequencing? The announcement basically describes it as a strategic planner that's built right into the tool. Before it even thinks about placing trades, it creates a whole plan to manage them with precision, all with one specific goal: to keep your margin free so it doesn't get all locked out. The whole process is really systematic. First, the tool pre-plans its order management. Then it executes that plan with total precision. And the whole time, its main goal is to keep your margin available. And apparently, this works across all kinds of leverage levels, from 1-to-1 all the way up to 1-to-300. And the ultimate promise here, the big payoff, is to solve one of a trader's worst nightmares, being in a really tough spot and not having the margin available to make a critical move to save a position or jump on an opportunity. This whole feature is designed to make sure that never, ever happens. So what happens when you put these two things together? You've got this instant tick-by-tick market analysis, and you combine it with this super precise margin control. What do you get? Well, this is where the source material makes its absolute boldest claim of all: irrelevant. I mean, just think about that word for a second. The idea here is that the system becomes so adaptive and so well managed that the usual chaos from big news events or crazy market swings just doesn't affect it. Instead of being a threat, all that volatility actually becomes an opportunity. So the big picture for you, the trader, is a tool that's meant to run on its own, 24/7, without you having to sit there and watch it like a hawk. It's being positioned as something safe and reliable that can adapt on the fly and turn the very thing most traders fear into a real advantage. So when you boil it all down, it's pretty clear who this is for. This update is aimed squarely at a certain type of trader, the one who puts capital security and stable, consistent performance above absolutely everything else. It's all about managing risk first.
All of this really leads to a much bigger question for the future of trading. As this AI gets smarter and analysis gets faster, are we heading into a time where human traders just can't compete in these crazy volatile markets? Or will there always be a place for human gut feeling when the code eventually messes up? The answer to that is really going to shape what trading looks like for all of us.